Hi there, welcome back to the channel. My name is King Jehu of Wall Street. Today I'll be teaching you what I did learn from the DAX mentorship 2024 and how I applied it to my GBPUSD trading this Friday. If you're new to the channel, please like and subscribe because what is going to be dropping on this channel is going to be very educative and very helpful to your trading journey, especially as a beginner. So this is my chart, as you can see. So I'm going to be giving you the details of how I traded this, how I spotted the zone, and what exactly happened. So let's jump into my screen. So guys, I'm going to try my best to make this video as quick as possible. So right now from the start, this is my entry point, right? But before this market came here, back on this day, 30th of August, I did analysis when the market was still very much on this place. Like, let me zoom it out. Very. So the market was still here, and what made me to enter with what made me to highlight all these points here that I talked about. So basically, let me explain the concept before I'm going to show you how it played out here. So what I was taught is that if we are in a bullish environment, you will see something like this. Market creates a low, and then we have a sweep of this low, and then a break of structure. So whenever this happens, we are going through this zone, right? Then breaks another structure. But now in reality, it doesn't just happen like this. But this is a bullish structure, right? What we are supposed to focus on right here is this. We have a break of structure from here to here. So after the sweep and break of structure, we are going to draw our feed level, first of all, from the swing to this point. So we're going to know how far the market went. And then Fibonacci, we have premium and discount. So this point, from half of this point, is going to be our think something like this. So when market trades back into this point, we are going to buy, and then we can also look for sales from this point into this point. That's the first thing. Second thing I learned was that whenever the market sometimes market can create something like this in a bullish environment. Sweep of this low, right? And then break structure. We'll come and do something like this. Then before it moves. This is what happens in reality. Then another time before you have this, you can have market do something like this before it breaks structure. So I'm going to wait for market to come back into one thing that I also learned that really helps me. He said after, and then this is the break of structure from here to here. Because in real life, market will not just play out exactly as you think. Then the last low before this sweep, I mean the last low after this sweep is your structural liquidity. So when I was talking about the concept of liquidity, he also talked about this last low. So markets will always come to take out the last low before into the zone before it buys. So I think from now I've clarified everything on this setup. So in a bearish environment, we're going to have maybe a high, right? Tip of the high. We're going to have a break of structure, right? So after that, we wait for price to trade into the zone. And remember, this is our structural, then boom. Good. So this was where we had the sweep. And then this sweep brought about this break of structure because it's a bearish environment. And then this is our structural liquidity, the last high after the sweep. And whenever price does this, you expect you're going to be protected. So you rest assured that your stop loss won't be this structural liquidity is going to take off. So this was the concept that I took, I understood that I wanted to, make it play out on the chart here. And as you can see, from this 29th August, I saw that this sweep of this high brought a break of structure. And then after that, we discovered that the market ranged a little before it continued. So this point, after that, I was ready to see, okay, maybe if this thing I learned is actually playing out. So market pushed down up to here by Friday. Then by the open of the next week, it traded up to here and up to here on Tuesday, then Wednesday, Thursday, and before I knew it, I would have bought from here in anticipation for it to get to the zone. But I was just testing the strategy for the first time. So I rushed and entered somewhere here because I was skeptical about market getting to my point of interest. That's it. So after everything played out, the market eventually reached my point of interest. And as you can see, the moment it reached this point of interest, it had a sniper entry. Like this is very serious. It had a sniper entry from here and pulled back up to this level in profits. Then before news came out, before all this you see here is just manipulation, right? Before the market continued moving. As you can see, if you check from here, you can see that here was taken before it pulled back to the downside. If there was no news, we won't have this manipulation. So whatever you see here was manipulation, but still the manipulation took us out. So we ended up at our stop loss here. So that's that about this. So you can see that I'll drop more updates on this particular course I'm actually learning, and then you guys can also go check this that on YouTube to learn more of this. Wow, I hope I'm as fast as possible though. So yeah, that's what I'll talk about. I'll talk about NFP, and then okay, let's go. So guys, welcome back from my screen. So based on what just happened here, I want to give you guys 7 concepts that are going to help you so that when next you are coming out to trade, you're going to have a little bit of experience to share in my experiences. I want to tell you what happened to my trading this week in particular. So first of all, let me explain what NFP means. NFP is non-farm payroll. It's a news event that happens on the first Friday of every month. So every month by 1:30 p.m., especially like Nigerian time, you can see this news happening, and then you can check it on forexfactory.com for all fundamental news, right, and their impact on the market. So secondly, what I want to tell you guys is that whenever you learn something, make sure you go to the market, try your best, back test for hours, and test how that strategy is working. You must not actually need a TradingView premium account to back test properly, but you can go back in time because all the data of the market from now till whenever the market was 5 years ago are still on your chart. So go back and test how are these things working, what was the win rate before, what's the win rate now, so that you know which strategy to focus on. Also, setup was based on what I just showed you guys now, and everything also played out the way I was taught, just that there was a manipulation along the point of my entry. So there were people that took their entry sometime earlier, right before the market opened, before the news came in, and actually they went away with profit. But I couldn't take my trade exactly at the point of the news because I'm trading a problem account, and this company will not allow me to place trade once news is open. It's against their rules. So in order not to lose the account, I have to follow their rules. Apart from that, try your possible best to add experience to your knowledge, because knowledge alone without experience is not going to take you anywhere. You need to understand how this thing works. When you learn something, make sure you go to the market, be sure that this thing is working, so that you not just learn something and keep learning strategies that have expired, just like and find what is really suitable for you. What trading style are you conversant with? What trading time of the day? What session are you like? You understand what session is suitable for you? Is much easier for you. Always make sure you're doing that. Always make sure you're working hard. Always make sure you are studying. People that have been profitable for even 8 years are still studying. So who are you not to be studying? You're just depositing, going to the chart. Damn, you're a gambler, bro. Go back and go and study. The reason why that market price I told you guys went up there was because the smart money, the big banks, and the people that move the market actually needed money to move the market, and they knew that a lot of people's stop losses and buy stops are going to be resting above those highs. That's why the market was manipulated up first before the main trend continued. So manipulation in the market is normal. That's why sometimes people like to run to derive, because there is no fundamentals, just technicals. But meanwhile, I want to tell you guys that no matter what the fundamental is coming out is going to say, if your technical analysis is right, the fundamental is going to go in your favor. Psychology now, every time I always say this, wherever you're reading a Forex book or you're watching a Forex video, you're always going to see risk disclosure. Whatever you're going to trade, make sure it's money you're willing to risk, because the market is really, really highly volatile and is really risky. So you have to have a lot of knowledge and experience. That's why there's a demo account for you to try freely without having all this risk and trying to pay with your live money. So make sure you only deposit the money you're willing to risk, and make sure whenever you learn, you use your demo account to try out everything you learn for a long while. When you're sure of your strategy, then you get into a real account. This way you're not going to get kicked out, you're not going to have mental problem, emotional damages, you're not going to blow account and keep blowing account, because if you don't want to follow the process, you can keep blowing account for the next 4 years, I assure you personally. But I don't want you to do that, so stick to the process, don't try to skip it. So lastly, my final advice for you guys is that whenever you are coming into the market, make sure that you are sticking to a solid strategy. Make sure you know when to enter and when to exit, because one of the things I learned this week was that I took a lot of entries, beautiful entries, went in profit, $40, $30, and I didn't close, and the market reversed back and hit my break even. Sometimes it was even back to stop loss. Like, I went in far profit, but I did not know where exactly to take the profit. So always make sure you have a constant risk to reward ratio, 1:2, 1:3. Once the market gives you 1:2, you can set break even at the 1:2 and wait for more. If it reverses, fine, just go with what the market gives you. Don't stay there waiting for the market to play out to 1:30, unless there are people that do that, but it's not for now. Make sure you are sure of what you are doing before you wait for your market to keep going. And then don't always swing, right? You can decide to swing, it's allowed, but there are some situations where swinging is not going to be suitable for you, so you have to calm down and take your trade from maybe 5 minute or 10 minute time frame. And always make sure you're not a scalper, make sure you're not a gambler, make sure you're a studious person. And look, every time before you sleep, always make sure you do something to add to your trading life, right? Wow, I hope you enjoyed this video. Please don't forget to like and share. Look, I want us to build this community like to a following of over 10,000 before December. So by God's grace, more things will be coming out, right? So if you like this content, please tell me in the comment section what you think. Tell me also if you traded this NFP. Maybe you are seeing this and you're also a trader like me. Maybe you took it on your account or something. Please just tell us in the comment section, and I'd love to see you next time. Thank you. God bless you.
They asking about me and Jesus. Me and Jesus. Me and Jesus like the